Today I'm going to show you a nice triangle consolidation on the Great British Pound Canadian Dollar Forex pair. Don't miss it. Hi, this is Tim from TradingStrategyGuides.com. My voice is still rough this morning. Thanks for bearing with me on that. As I mentioned Monday, we're coming up quickly on our training series about becoming a professional trader. This will be a free course. I'll be releasing the training videos on Wednesdays. Don't forget to comment below on what topics you would like to see us cover. Today's trade pick is an ugly triangle on the Great British Pound Canadian Dollar. We'll look at that shortly. But first I'll update you on the open trades. Then we'll dive deep into the archive for today's trading maxim. Happy hump day. Remember to click the subscribe button and hit that bell so you won't miss any of my great trade picks. Let's update the open trades. Spot gold is in a little bit of a pullback right here. The parabolic SAR is getting very close to the break even, so we should be able to start trailing stops on this in the next day or so. The Swissy yen hit the break-even stop on Monday, so I'm done with this one for right now. We got a little bit of profit on the first half and break-even on the second half. We've run into this situation before. This is NFLX, and this hit the first target right here. We got half off for profit and set the stop to break-even. Then the unthinkable happened. Gap down. That happened right after I recorded my video Monday. So it opened below our stop loss, which means we got closed below our stop loss. So it closed the second half at 364.76 on the open, and that was a $4.25 loss on the second half. So we're still profitable overall on this trade, but we're done with NFLX for right now. The Euro Swissy pushed just a little over halfway to our target right here. Then pushed up and retested the support level up here, which is always a good sign. And if we get a weekly close back inside this triangle, of course we'll take the loss right then, but I expect that we're going to hit first target pretty soon. And this Aussie Canadian is pushing down nicely right here. It's made a new low. We got half off for profit, and the stop on the second half is at break even. Now we're waiting for the parabolic SAR to get down here so that we can start trailing the stops. Okay, let's take a look at today's setup on the Great British Pound Canadian Dollar Forex pair. So here's a pretty ugly triangle on the weekly Pound Canadian. You know, I told you that beauty and symmetry is not important in consolidations, even though I like to see it. It's more important to see a decline in volume and volatility, in my opinion. So here's the trade plan. We will buy a weekly candle close above the triangle or sell a weekly candle close below the triangle. On the breaking candle, we want to see the volume bar reach up here to the volume average to enter a full-size position. If it doesn't quite reach the average but does reach 75% of the average volume, I'll open a half-size position to reduce risk. You can calculate the percentage by dividing the volume here by the volume average right here, and you should get 0.75. If you don't get 0.75, stand aside on the trade. The stop loss will be 1.5 times the daily ATR, and the first target will be 1 times the daily ATR. So let's say, for example, this were to break to the downside like this and close here, and just ahead of the close you took a sell position right there, right at the close. On that day, you will switch to the daily chart and look at the ATR on the daily chart. Multiply that by 1.5, measure that distance above your entry, and that will be your stop loss. Measure 1 ATR below your entry, and that will be your first target. If after entering the trade we get a candle that closes back inside the triangle, then we'll take our loss right then and not wait for it to hit the stop loss. Our intention is that a breakout of the pattern should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we will close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. These two rules are the very definition of cutting our losses and letting our winners run. Typically, I do this using two positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we will have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on each trade. And that's the setup on the Great British Pound Canadian Dollar pair. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And that's my intent for the trading maxims, to help control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today we're going to do a deep dive into the archives for our maxim of the day. Tim's trading maxim number 7, trade what you see, not what you think. This is a very important concept in trading. You can't let your wacky brain overthink these trades. You can't listen to what your friend at the club or your Uncle Marty told you about this stock. As a technical analyst, I believe that everything that can be known right now about a market is built into the chart. So you need to act on what you see in the chart, not what you think could happen. Develop a rule set and follow your rules religiously. Remember our Great British Pound Canadian Dollar trade plan here. We're going to buy a weekly candle close above the triangle or sell a weekly candle close below the triangle. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the daily ATR, and your first target is 1 times the daily ATR. And remember to click the link below to the trade management video for more details. And also remember to sign up for my free Trading Picks email list so you don't miss any of these great picks. I send out about 2 or 3 trading picks a week from all different markets, and you'll get to see them first. And the best thing is, it's free. I'll put the link below this video. Be sure to come back to Trading Strategy Guides YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions that you may have. I'll either answer your question right in the comments or in a training video, or both. And remember, the only stupid question is the unasked one. Don't forget to let me know in the comments what you think about us doing a series of videos about how to become a professional trader and what topics you would like to see us cover. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below. Have a great hump day, and I'll see you next time.